Happy Friday, traders. It's 8:01 a.m. Chicago time on the 16th of April, 2021. This is episode number 1974. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's dive head first into the conversion trading pre-market summary sheet. Risk on today, risk on as the overnight session, the extended trading hours push to new all-time highs. The S&P printed 4173.50 just now, new all-time high territory. Across the board, seeing strong strong inflows into the equity markets. However, silver's leading the pack. Silver's up 32 cents, 33 cents, trading at 26.20, 29 and a half, up 1.27%. The DAX is also pushing higher, up 1.09%. Gold trading at 1783. Gold has made its way steadily towards the $1,800 handle, moving from 1650 to 1783 over the last week and a half or so. The S&P is up 10 points. Sound check. Is my sound muffled? Is that me? The S&P is opening up in a gap higher. Surprise, surprise. We've seen a lot of those. The Dow's up 85 points. The Russell 5.5. The Russell's still inside of yesterday's range. The Dow is in new all-time high territory, 34,000 print. And the Nasdaq's also pushing new all-time highs. It's just a wonderful thing, right? I want to remind you that crude has rolled to June. Crude is trading June, currently printing at $63.55, up 4 cents or 0.06. Yeah, I'm like struggling with all kinds of good allergy stuff. The U.S. Treasury bond is the laggard today. Down a handle and 14 ticks. This kind of correlates with gold and silver heading in the opposite direction. The bonds are down a fair amount. We need to keep an eye on the treasuries for today. Overall, again, bond yields remain in the middle of all of it. This J&J vaccine issue is all over the media and is likely to have knock-on effects as to immunizations and vaccinations across the globe. And China prints a GDP record of 18.3%. Insane. So that's where we stand. The S&P has traded 173,000 contracts. The S&P inventory is flat. The volume below yesterday's close and above it is now the same. It's a multi-distribution profile. The S&P is in a price discovery mode. In other words, it is trending, and that's what we're coming into today. Okay, taking a look at what was expected yesterday versus what we got. This is yesterday's play. The primary scenario was looking for a pullback to 39 to 35 zone, and then was looking for a push through the high that was put in overnight at 46 and a quarter, and then was looking for it to push to around that first the 4150 4155 area, the one Vol Sigma projection. And the secondary is to take out the overnight high and then impulse down into 39 and then fall through, which did not happen at all. Here's what yesterday actually brought us. Let me clean up the chart so I don't shock you with it. Here's what we've got. Yesterday, we opened in an internal gap pushed through the overnight high. Let's bring it all back. I know it's noisy. Pushed through the overnight high. We opened right at the open, right at the top of the range. We pushed for an opening swing high of 48 down into 41 and a quarter. We could not get down into that 39 area down here, 39 to 35, this chop area that we had in the overnight session, this big zipper. And so it was bullish all the way. Pull back to mid right here, pull back to mid and VWAP to turn, and then we break the IB high. For those of you who attended the webinar, the free webinar, the open webinar, public webinar on Wednesday about classic or key volume profile setups, we had what's called a ledge, a ledge right here at 49. So if you look at this profile, let's expand this a little bit. We don't need the annotation. If you look at what it formed here, we have a ledge right here. So we get this ledge, and at 49, and then see this sudden drop in volume. In fact, it goes right there. You can see there's a ledge here, a sudden drop in volume right there at the 49 even, and then we push through. So we have this break higher. That's a tough one to catch, and then we pull back. See that ledge still sitting there? As the market expanded higher, you can see this ledge right here at 49. We push higher, and then it comes all the way back to 41.4975. It pulls back to 41.4975, which happens to be the IB high, setting up a pullback long, and that pullback long goes to 61.75. Yielding about 12 points of range for about 4.5 points of risk. This was something that folks had asked me about. That's basically a ledge setup right there that occurred during the session. That's, of course, in addition to the fact that we pulled back and took this mid VWAP setup. So two confluences. The ledge also had the mid right there again with the IB, ledge, mid, IB, all in the same spot for that rotation to 61.75. That's kind of a volume profiling, market profiling classic setup on what the profile is showing. So we end up yesterday with one big fat upper distribution and one small distribution below. We end up with a low volume node right at the ledge at that 41.50. Any test lower, we need to pay attention to the 41.50 retest. Delta was flat again as we climbed. This has kind of become an everyday occurrence that we come in and the market just moves away from the open, which is basically the low print yesterday. The low print was just 2 ticks below the open, 41.25 versus 41.75 open, and which is the zero line in the delta, and then we push and close near highs. This was a normal variation day with a negative delta down here. So it's the saga continues of making new all-time highs without downward rotation and recheck of what's below us. Let's take a look at what we've done so far today in today's session. Very quickly, we see that volume is okay, 178,000. We have a multi-distribution profile, lots of price discovery in the overnight session. It looks like a guy who's screaming. Let's put maybe he's singing. Let's put a musical note here. Like that, like that, like that. Pretty cool, right? Anyway, just having some fun. So multi-distribution profile. On the open, it actually dropped and then consolidated into the Asian session right here. And then it started to rise with the European markets. So, in overall, the European markets showed a couple pretty decent numbers, and overall, the market has been trending up. There's just nothing stopping this thing. The fact that there's so much liquidity that needs to go to work and go somewhere, all these $1,400 checks and so on need to be deployed somewhere if they're not paying the bills. And not everyone is living paycheck to paycheck, as some would have you believe. It just seems like we're flooding the market with liquidity. And where in the world can you put your money to work and get some returns? The hot market is the United States, and it's dragging everything else up. So, no shock that this will continue higher and higher and higher. Just remember, as of I think January, about a quarter of the world's money supply in US dollars was generated in the last year. A quarter of all the circulating dollars in the world were generated in the last year. That money's got to go somewhere. Okay, it's got to go to work. So this is how we end up. We end up in a gap higher this morning. Let's take a look at the bigger picture. So we had a bit of a pause here 2 days ago on Wednesday. We ended up breaking the low. We end up breaking the low. We end up ending the time framing up for a little bit, but this basically amounts to a small widening megaphone-ish kind of play, and then we open in an internal gap and we continue higher. Very bullish. We've moved away from this 41.2175 balance. We started to create new balance in the middle, and we have another distribution up high. What this is saying, folks, is it's not able to find consensus. The market will continue higher until it finds aggressive enough sellers to step in and find balance. The market right now is actively looking for what the fair price will be. And as long as the fair price is considered to be higher, then sellers are not going to be aggressively selling, and therefore prices will keep moving up. So multi-distribution profiles on a market that just continues to build higher and higher and higher high volume nodes. This is a market that is accepting higher values and is still seeking its sellers. We don't know when that's going to happen. It could blow through 4,200, could blow through 4,300. It could make us drop our jaws for the next year, just like it did in 1998, 99, and through 2006, 2007. You just sit there and stare at this thing, and it's just climbing and climbing and climbing and climbing. So that's where that stands. Again, we're opening in a small gap up above yesterday's range. We continue the last day of the week in what is a price discovery week. We've had pretty good range this week. It's not great. It's not 100 points, but we've been getting 80, 85 points. And so far we have about 60 points of range, 60 and a half points of range. There's more room to the upside into 4180. So it is what it is. So let's take a look at what's expected for today. All right. So here's what we've got for today in our expectations or planning segment. What are we expecting today? We've got a gap up. Gap rules apply. Here's the gap zone high. This is yesterday's high. We have a high of 73.50. The expectation is an open auction out of range. I'm looking for it to drop early. Again, we've seen this again and again and again. We open in a gap higher, we explore lower. I'm not sure if it'll leave, I can't tell if it'll leave a gap zone open or not, but we want to pay attention to how it treats yesterday's high. Does it come back into the fold or not? Probably will not. And then expecting it to take the overnight high at 73.50 and then grind its way up on what is likely to be a quiet Friday grind higher. There's just nothing stopping this market. I don't have any references up here. I don't have a reason to believe that sellers would step in at any moment here. Of course, news can change that, but overall, just not seeing how this market is going to be held down. So, expecting a range from about 41.68. Yesterday, the high is 66.50. Looking for 41.68.50, all the way up to 41.80 and potentially to the 1 vol sigma up here at 92. So 80 is a reasonable target, about 8 points. And I'm expecting it to hold this area here at 68. That's where that stands. The secondary, of course, is the secondary scenario is always the opposite. Not always, but most cases the opposite. 41.73.50. Take out the overnight high. We're not likely to tag this 54. So looking for the overnight stat, push this 41.73 into 41.80. Again, 80, poke through, and then look for an impulse down back to the open, consolidate at the overnight point of control, back into the prior all-time high, 41.66.50, fall back in, and then finish higher. So overall, expecting a higher low, higher high, expecting a multi-distribution profile to continue, not looking for a large sell side move, short move on this. Yesterday, we left a single print at 41.48 and a quarter. The single prints so far have not been tagged. We've been putting in single prints that have remained open. Again, another indication that the structures below are likely to continue to remain weak. I'll leave you with that. It is Friday. Just remember to mind your risk and to make sure that you're not extending yourself. This is the type of market that requires quite a bit of patience and just waiting for your best or highest quality or most confident setups as opposed to just jumping in to catch the long wherever it may happen. Okay, there's nothing more frustrating than getting the trend right in your time frame but being stopped out every time you try. So let the market, I know this is easier said than done, but let the market come to you and provide you with details before you step in. So make sure the risk is defined or you have a good area to lean against. And so you can trade with a confident hand. Stick to the narrative. The narrative is long. Look for areas to lean against. Look at what could support your trade and wait for the market to test those areas. Good luck.